So buying a house is exciting, but did you know that one small mistake could get your mortgage application rejected? I've seen a lot of people ruin their chances of getting a mortgage, and I don't want that to happen to you. And this is why today I've brought in Ripley, who is a qualified mortgage advisor who specializes in helping foreign nationals buy their properties in the UK. So in today's video, we're going to be detailing the mistakes to avoid when applying for a mortgage, the things to avoid to ensure that your mortgage application is approved and you can buy your house. And trust me, there's one mistake that could literally wipe out your chances overnight, and we'll get into that shortly. But before we go into the video, if you're looking to buy a house soon, we're going to be hosting a live webinar, okay? A live mortgage webinar where you can ask your questions and get answers from Ripley, the qualified mortgage advisor who's going to be coming on soon. So it's going to be very interactive. It's just going to be a Q&A. You join the webinar, you ask your questions, you get answers. Link in the description box to register, okay? This webinar is going to hold on Friday the 4th of April, so make sure to sign up right now so you don't miss out on that and you get the opportunity to get your questions answered. Now, without further hesitation, let's get right into the video. Hi Ripley, thank you so much for being here. So yeah, please could you introduce yourself?
Of course, thank you, Chidera. So my name's Ripley Salguero. I'm the founder of First Time Finance. I'm a mortgage broker by trade, but we specialize in helping people that have migrated over to the UK to buy their first home here.
Yeah, so people like me, people who moved from like outside the UK who are here. All right, cool. So essentially we're talking about the mistakes that people make when trying to buy a house in the months leading up to applying for their mortgage. So I think one of the ones that I've seen that is a bit, I mean, I've seen a lot of people do this, is like taking on new debts before they apply for their mortgage. I think a lot of people don't realize that that can actually affect their chances of approval, getting a car on finance, or maybe even taking out a personal loan. So, like, could you just explain why this could be a problem when applying for a mortgage?
Definitely, yeah. So of course, when you're taking on new debt, that will affect a few things. So firstly, it will affect affordability. So that's because it's actually increasing what's called your debt to income ratio. So what that really means, of course, is how much debt you have, but also the monthly payment for that debt. So if you imagine your net income is £2,500 per month, but then if you've got a £300 a month car payment, that knocks away your income quite a lot. The other side to this is actually to do with your credit profile and your credit score as well. So when you take out a new credit commitment, that will actually knock your credit score. So it's important not to be doing loads of these or really any directly before taking on a new mortgage.
So essentially, taking out new debt is not a good approach, right? I think also it can also like pose you to be a risk. Does it also come across that way, like a risk to the lenders, because you're trying to take on a big mortgage, right, a big loan, and you're already in like several loans, and you're even taking on more. So I think it could also come across as financial risk, right, for the lender.
Of course, yeah, the more debt you've got against your name, especially if you've taken out more recent debt, there can be question marks as to why you'd be taking on that much debt, and why you needed to have taken that out in the past. It's kind of money management, for example, is what lenders potentially look at. So if you've had to use credit cards or different credit forms, they might ask why.
Okay, good. Thank you. Just as we go along, you're ready to buy a house and you would like to speak with Ripley on a one-on-one. He offers one-on-one sessions for people who are ready to buy. The initial call is free. Link in the description box below if you want to book a call with him. And then he'll walk you through your mortgage application and hopefully you get to buy your house. Okay, cool. The second mistake that I think people make as well is changing jobs or becoming self-employed. In the months leading up to, applying for a mortgage, people tend to feel, okay, oh, if I get a higher job, a higher paying job, it's gonna improve my chances of getting a mortgage. While that may be true, I've seen it also play out differently for certain people because it kind of like hampers their chances or like the mortgage application process. Could you shed more light as to why lenders might not like this or why this might affect the application?
Yeah, definitely. So, I mean, it is definitely situation specific. And I'll give you a couple of examples. But to answer your question directly first, it's really due to stability, right? So, what lenders are looking for in your whole situation is stability, right? They're lending, ultimately, it could be hundreds of thousands of pounds as a mortgage. So, if you were to lend someone that much of your own money, you'd probably want to make sure that they're in a stable position and could pay that back over the long term. So if
Mhm.
you've recently changed jobs, that can just cause concerns potentially that, okay, how stable will that new job be? Is there a probation period involved? and things like that. Instances where it can be okay is more if you're changing job within the specific industry or it's a very similar role. It can be a lot easier for us to then justify that, okay, fine, they know exactly what they're doing, they're going into a similar role. Maybe it's progression, right? They've kind of got a promotion through doing so. But it is something we have to be careful about, definitely, in terms of changing jobs recently or potentially lots of times as well. So if you change jobs multiple times within the last year, and it was all
Mm.
for short periods.
Okay. How about becoming self-employed? So like in the months leading up to a mortgage application, I decide to quit my job and become self-employed. Is that also something that lenders frown at?
So with self-employed income, essentially the bare minimum of proof that they would allow is 1 year. However, if you're in the UK on a visa, then it would be 2 years. There's no lenders that would accept kind of the visa with a deposit that's less than 25% if you've only got 1 year's self-employed history. So you need a lot more proof of that. And depending on your structure, they're looking for different documents as well. Anyone that's actually gone self-employed will know that first year as well might not be the best year out of all of them in the future because you're building. So that can kind of show its challenges as well, right?
Okay, so I think that's also new for me. I didn't realize that if you're on a visa, when you're self-employed, it has to be 2 years worth of like job history or work history, right? But I think that kind of makes
Yeah.
sense, honestly. Okay, cool. So I think the next mistake that I've seen or I've heard about is missing or late payments. When people miss out on like a phone bill or a credit card bill or something, and then that can also like impact like mortgage approval. So like how much does this matter when you're applying for a mortgage?
So, this matters a lot. So, what we do see is that if you've potentially had a missed or a late payment, definitely within the last couple of years, so let's say last 2 or 3 years, it can have quite an effect on your credit score. Now, these actually do stay on your credit profile for up to 6 years. But of course, the longer it's been since it happened, the more time you've had to kind of build back up the credit profile. So of course,
Okay.
lenders would look at a missed or a late payment as kind of that instability again, right? To go back to that point, is that you've had a credit commitment in the past and then you've missed a payment. Of course, for a lender, that's not a particularly good sign. It
Okay.
doesn't necessarily mean that we can't get the mortgage. It just means that the options we might be able to access could be a little bit more expensive. So, for
Mhm.
example, the cheapest lenders will always have the hardest credit checks to pass. So they'll be the least forgiving out of all of the lenders. Whereas if it doesn't work with them, there are normally other lenders it can work with. It will just be a bit more expensive in terms of the interest rate.
Okay, so expensive meaning the interest rate will be higher than you would typically have gotten. Like you'd have gotten a much lower one, but because of this issue, it might be higher. Okay.
Exactly. Yeah. So it's definitely a mistake to avoid.
So I think the top tip here is I think you can set up direct debits like to be on top of your payments. Try as much as possible not to miss your payments in the months leading up to your mortgage application. And then also try and check your credit score at least 6 months before so you can start like fixing whatever issues you might come across on your report. And then also just before we go on, like I said at the beginning, we're gonna have like mortgage application Q&A. So if you have any questions about mortgages and you want to be able to ask Ripley directly, make sure to sign up on the link in the description box below. We're going to have that on April the 4th. So Friday, April the 4th. Make sure to sign up and you get to just ask all your questions and get like answers on the spot. The next one, which I think someone actually shared this with me when she was applying for her mortgage, was flagged up, was the fact that she got a sum of money, like she got some payments. She made some payments from her account, like in Nigeria. She moved money to the UK and it was a lump sum of money of about £5,000. And she said she was like asked a lot of questions about it. Where did this money come from? She had to explain, provide proof of income, and all of that. Making large unexplained bank deposits, it can hamper your mortgage application. So, like, why is this a problem? Like, why do lenders flag this?
Yeah, of course. So, of course, when it comes to your deposit itself, so the money that you're going to be putting as a down payment for the property, there are anti-money laundering rules and things that they're going to need to check. So it can make it very difficult if you have large transactions coming in, right? It means that they're going to look into them because ultimately it is potentially our responsibility, the bank's responsibility, and the solicitor's responsibility to verify where those have come from. And
Mm.
I have seen cases where okay, you might have those in your bank statements and it's fine for the mortgage, get the mortgage offer, and then later down the line, the solicitor could potentially kind of bring that back up. Now, one example of this that we see quite often are revolving savings schemes. So it's called different things in different communities and so on, but
I think we
ultimately,
call it ajo. Do you mean like the
agile.
informal savings, right? That people do where we all
Exactly.
contribute certain amount, someone takes it, it keeps revolving, right?
Exactly. Yeah. So
Yeah.
it would be in a community, whether it's friends, colleagues, whoever it might be. And let's say, for example, there's 10 of you, you're each sending £500 to someone each month, and then
Mhm.
you'll each have a month throughout the year. So this is something that we see quite often. And unfortunately, from a lender's perspective, it's not acceptable. So if we went to them and said, okay, this is where your deposit is coming from, they would decline it. So about 3 or 4 months ago, I went round to every lender that can accept like visa applicants, and I spoke to them directly, got them to raise it up the chain, and they all said no. I've heard of people using this for their deposit. That's probably what you're going to mention. So I think with that, you're very much risking it in terms of whether it slips the net or not, whether you get away with it, right? If the solicitor brings it up later on, or the bank, essentially could run into issues.
Interesting, because that's something that I know a lot of people like from Nigeria that are here, they do that. So we call it ajo. But is it not?
Mm.
I mean, it's surprising to me because essentially it's my money because I contributed 10. So if it's like 10 months, for the 10 months I contributed, the only thing is I get to get my money earlier than if I had waited the whole 10 months. I just find
Yeah.
it very interesting that that's flagged as an issue.
Mm. I mean,
Okay.
I totally understand it, by the way. It makes complete sense, right? And as you said, you get the money earlier. I think it's just from a lender's or a money laundering perspective, it's because the money's going around in different bank accounts, and it's almost impossible to actually prove where that's come from. Another thing that people might use for the deposit is obviously gifts, right?
Yeah.
So that could be another example of money coming into their bank account. If it's not from a direct family member, that can be quite difficult. So a lot of lenders will only accept gifts from immediate family.
Wait, so
Um,
no extended like grandma and grandpa?
yeah, it depends on the lender. Each have their different criteria, but yeah, a grandparent would be completely fine normally.
I mean, would they still have to provide like proof to explain that gift? Like, would they need anything to explain that this is a gift and not a loan?
Yeah, it would be a gifted deposit letter, is what we call it. So each lender's got a slightly different template, but the general consensus of it is you're essentially signing off that it's not a loan and that you're not going to have any ownership of the property itself.
Okay. All right. Thank you. So, if you're also just learning like me that a jaw might be a problem, and if you need help structuring your finances to apply for a mortgage, once again, you can book a free initial call with Ripley. Link in the description box below. If you're ready to buy, make sure to book that call with him. He's very skilled with like first time buyers and also like foreign nationals. So, you definitely want to do that. Link below. Another mistake that I've heard of is people applying for new credit thinking it will help. You know how someone has a low credit score and then they want to get a credit card so they can boost their credit score quickly in order to apply for a mortgage. But then I think depending on the time that they do this leading up to the mortgage application, I've heard that it can have like adverse effects. So could you shed light on this?
Actually, I mean, you're 100% correct, by the way. So it having credit commitments does help, and that's how the credit system works in the UK. Of course, you're having to prove that you can handle credit. However, if you take out a new credit commitment, it will do a hard credit check. And what that typically does is it will knock down your credit score slightly. So you'd actually need to wait enough time for that to recover. So, of course, if you're doing that a couple of months before you get a mortgage, that's probably not enough time for it to recover. Whereas if you took out a credit card a year and a half, 2 years before getting a mortgage, can be plenty of time for you to use that and show that you're building up a credit history and for your credit score to recover. The one
Mhm.
thing I always tell people and clients to be careful of is that not not to take too many credit cards, basically, right? So I've seen it where clients will go, okay, yeah, credit is good. I need to take credit out. So they might take out two, three, four credit cards, and then suddenly they're building up a lot of credit, right? And they've got high balances, and that will knock your credit score a lot. So if you're going to do it, it's best to do it earlier. And generally speaking, just get one credit card. Try not to use too much of the credit limit either.
Okay. All right, thank you. Hand in hand with this, it's kind of like closing out credit accounts. I think this was something that I almost did when I was applying for a mortgage. So I had like credit accounts that I was not utilizing anymore, and I wanted to close it. And someone brought it to my attention that, oh, if I close those accounts now, it's going to be a problem. Could you shed light on that? Because honestly, it doesn't make sense to me. So why would closing out an old credit account be a problem as well for mortgage application?
So essentially, if you shut down an existing credit card, so instead of just repaying the balance you're completely closing, what it can do is increase what's called your credit utilization. So essentially, that would end up hurting your credit score a bit. And it's quite common to think, why would that even make sense? And to be honest, I even think I even think that too. But it's the way the system works. So it can be better if initially you take out, as I said before, kind of one credit card and then you repay the balance instead of having to actually fully shut the card down, for example. Of course, as I was mentioning previously as well, it's important not to utilize too much of your credit limit itself, because having that higher exposure as well. So if you've got a £1,000 credit limit and you're using £800 of it, it can be quite harsh on your credit score as well.
Yes. Yeah, your credit utilization, I think the rule is to try and keep it under 30%. So if the card, for example, the credit card is £1,000, you want to keep that under £300 ideally. So your utilization is not too high. Okay, so I think the tip here is if you want to close out an old account, probably leave it until you're done with your mortgage application and you can decide to close whatever accounts you're not using. From my end, is there any other mistake you've come across, dealing with foreign nationals or like first time buyers that you would want to shed light on?
Yeah, I mean, what I would say is that a lot of the information that you might read online can be incorrect or misleading. And I think that's true with everything, but particularly when it comes to home buying. I think the information that you put out there, Chidera, is brilliant. And when I speak to people that have sort of looked at your YouTube before, they seem extremely well informed as well. Whereas if you're just going out and Googling, there's a lot of conflicting information on there. So I think believing everything that you've read online, and for a lot of our clients, potentially they've been told they need to have lived here for 3 years or they need a much larger deposit, 25% deposit. None of that is actually true. And there are options available a lot earlier than that. So I think that would be another takeaway as well, is just to make sure that you're getting the right advice early on, listening to the right people. I would say Chidera, not that everyone needs to hear that, but Chidera is definitely one of those. So yeah.
All right. So I think speaking about getting the right advice, once again, if you want to speak to Ripley directly and you're ready to buy, he's super helpful with this. He's super knowledgeable on this. Like this is his specialty. So make sure to book that call with him on the link in the description box below. And then also we're going to have a live Q&A with Ripley. So I know this is pre-recorded. We're going to get the chance to talk to Ripley and, ask him your questions live and direct. So make sure to register for the webinar on the 4th of April. So Friday, the 4th of April, I think at 6 p.m. or so. But just make sure to register, link below. There you have it, guys. So those are the biggest mortgage application mistakes to avoid. Avoiding these mistakes can save you time, stress, and even thousands of pounds. So if you're planning to buy a home soon, I think getting advice early is super important so you avoid these mistakes. Do you have anything to say, perhaps your page and where they can reach out to you for more information?
Yeah, definitely. So firstly, thanks for having me, Chidera, of course. As it states on the screen, so our company name is First Time Finance. My name is Ripley Salguero. If you Google that, Instagram it, TikTok, wherever you're preferred, or even YouTube, you'll find me. My name will come up on there.
Yes. And I'll put the link to his Instagram as well in the description box in case you want to reach out to him, or follow his page. The link will be in the description box. All right, guys, thank you so much for watching. I hope this has been helpful. Just sign up for the webinar so you can ask your questions there. Till next time, thank you so much, guys. Bye-bye.